All right, guys. So the first stock on the list is Hims and Hers Health Incorporated. So this stock is currently trading at around $24 per share, and it's up over a whopping 175% this past year, rocking a PE ratio of 61. My only concern with this stock is that Amazon is entering this space, and that could be potentially problematic as they could take a very, very large portion of the market share. However, this is a big industry, an emerging industry, and I think Hims is currently positioned very well in the market. So I'm definitely willing to take a chance on adding this stock to my portfolio. Right now, like I say, trading at about $24 per share. I like to see it pull back to around $20 to $21 per share, and I'd be comfortable getting in at that point. So, of course, do your own research before you make a decision, but this is one that I'm looking to add to my portfolio next year. And one thing that I'll caution you with, I don't know about 175% returns again, so don't go into it with that expectation. So the next stock on this list is AMAT, or Applied Materials. So this is a stock that's in the semiconductor, the chip space, and they work a lot with companies like NVIDIA and AMD. So in that regard, it's kind of like they have a moat. They're kind of isolated from the greater economy, and things don't really affect them as that industry is just so strong. It's currently trading at about $162 per share, only up about 4% over the past year, which isn't that impressive. However, this is probably the most boring and conservative stock on the list. This is one that has a very high floor, so don't expect this stock to have major pullbacks, but the ceiling is a little bit limited as well. I do think they're poised for a good year coming up. I could easily see double-digit returns, 10, 11%, maybe 12%, which is a good play and a good option to add to your portfolio. The third stock on this list is AppPL. Now, I absolutely love this company, and basically what they do is they work in the advertising space for mobile apps. And, as the population gets younger and younger, more and more people are on their phones more and more of the time. So this is an industry that I see that has a pretty much infinite upside, and it's currently trading at $366 per share. Don't let that share price scare you away, because in the current landscape of investing, we have access to brokers like Robinhood that will allow us to purchase fractional shares, and pretty much almost all brokerages offer you the opportunity to purchase fractional shares at this time. So don't let that share price scare you from adding that to your portfolio. Last year, they were up an amazing 750%, which is crazy. Again, I want to caution you guys, don't expect 750% returns again this year. I think we all missed out on that opportunity and that pump, but there's still opportunity, in my opinion, for returns in the 50 to 75% this year, which is still a home run investment. And it's a company that I'm really excited about, and I'll be looking to add this one to my portfolio here very soon. One thing I want to caution you guys with is that when you see a company have this type of growth, 750% in 1 year, you have to be aware of the pullback. It's almost inevitable that there will be a 15-20% pullback, maybe even more. So if you buy the stock now, just be ready to weather that storm before we see the 50 and 75% potential returns. We could see a 15-20% pullback if you were to buy now, or you could wait on a pullback to get in. A 20% pullback puts this stock at $300, which is a lot cheaper than it is now. However, there's no guarantee that it'll pull back. I'm telling you to be cautious, because it's pretty likely when you see that type of growth, but there's absolutely no guarantee. And if you wait for the pullback, you could miss the opportunity to get in on the stock. So with that, the best approach will probably be to dollar cost average. If you have $1,000 and you're planning to invest into this stock, maybe put $300 or $400 in now, and then dollar cost average over the next couple of months or so, or a few months or so, and that way you'll get an average price of the stock if it pulls back. But if it takes off from here and doesn't pull back, at least you're involved in it and you didn't miss out on the opportunity altogether. So the next stock, which isn't really a stock, it's an ETF, is the Vanguard Information Tech ETF, or VGT, and it's currently trading at about $637 per share. And again, guys, don't let the share price scare you away. It's up about 33% this past year, which is really, really good for a ETF. And the best thing about this asset is that it gives you instant diversity or diversification. And that's one of the key pillars in protecting our capital, because as investors and traders, our number one priority is to protect and preserve our capital so that we can stay in the game. And having a diverse portfolio is one of those defense mechanisms that we can deploy. And this will give you instant diversification within your portfolio. I've personally held this asset in my portfolio for the last 3 or 4 years or so. It's performed extremely well, and I don't plan to sell it anytime soon. The last stock on this list is Micron Technologies, currently trading at about $84 per share, up only about 5% this past year. However, I'm optimistic for bigger returns in 2025. Don't expect, 750% returns like AppLovin last year, or, 175% returns like HIMS the previous year. However, I can, confidently say, based on my research and analysis, that a 20%, 25%, maybe a little more is definitely within the realistic realm of possibilities for this company. And I'm optimistic because they haven't had that big pump yet like some of the other growth stocks, only going up about 5%, which is, I wouldn't say flat. It's a little bit better than flat. They haven't had that big takeoff, and I can see them having that this year here in 2025, especially with the landscape with everything after the election and such. So that's a company that I'll be looking to add to my portfolio. I'd love to see it pull back to the high 70s, maybe 77, 79 bucks per share, get it a little bit better price, but it's not a bad deal at 84 either. So to recap, the 5 stocks are HIMS, Applied Material, AppLovin, the VGT ETF through Vanguard, and Micron Technology. I hope you guys found this video informative. If you guys have any questions, please leave them in the comments below. I'll be sure to get back to you as soon as possible. Connect with me on Instagram, guys, at Sterlingtheinvestor. I love to chat with you guys. And again, I hope you guys found this video informative and it helps out. I look forward to talking to y'all again soon, and I hope y'all have a great new year. Thanks.